Welcome to Markets Now. I'm Michelle Rook with Vince Boddicker with Farmers Trading Company, and we are seeing mostly lower price action here this morning with the exception of soybeans. But Vince, let's talk about this grain trade first of all. Corn and wheat futures, are we still seeing a little hangover, at least in the corn market, from the reports on Friday?
I think so. You had that nice rally early in the day, and then looks like there was sellers present. So we just have to work through the next day or two, as we discussed. If we can hold Friday's lows through Wednesday, then maybe you can get a 15, 25-cent pop in the corn. But I think to get more than that, you really have to have some additional news. And I think there was also some news out of increased carry out numbers out of China on Friday, which doesn't help the situation.
Yeah, absolutely. And what about the wheat market? Is that dragging corn down as well here? Because we're seeing some pretty good losses in that market.
I'm going to think that's what it is today, because corn itself was holding well until wheat started to back off on its own. It did earlier and then came back when corn held. But I just don't think there's a lot of news out there. Most of the world is in pretty good shape. Not that we didn't get some reduced acres on Friday's report, but all in all, world supplies adequate for the time being without any major threats.
Yeah, and then you have the dollar higher today. That's probably not helping.
It's not. I'm not sure it's a big factor. I think it's more sheer numbers in Friday's reports. Is it the highest we've been for a couple, 3, 4 weeks? It is. And if we close up here above 102.50, maybe you're going to go to 104 to 104.50. But I don't see a lot of runaways to the upside in there.
Yeah. So what about the soybean market? It's trying to pop higher here, at least hold gains. And again, we've held Friday's lows, but is this just a little recovery rally, or is there some other news that's kind of helping support the market here this
I
morning?
think the dry forecast out of Brazil for this next week or so was part of it. Whether we do much damage or not, and the rains come again, as I talked about, I think that becomes key on where it's at. But it feels a little better today, and even Friday's rally felt pretty good. But you got to see coming back down this morning, and with new selling after being 11, 12 higher, and there was buyers there, it's at least a little impressive short term.
Hmm. We continue to see downgrades, though, of this Brazilian crop, don't we?
We do. As we discussed, you did see some private factors do some things on Friday at 143, and this morning there was an X or tweet, whatever we want to call it in today's world, that talked about the farm commodity group, export group out of Brazil, lowering it to 135, which is huge. But whether there's much credibility in that one or not, I think only time is going to tell us.
Yeah. Why do you think the markets haven't reacted more, though, to a lot of these private forecasts that have continued to lower that Brazilian crop?
I think just because Argentina seems to be offsetting it, as we discussed before. Michael Cadonier lowered the beans by 2 bushels an acre, but raised Argentine. He lowered corn by 2 in Brazil and raised it 3 in Argentina. And I think all that makes a difference. Last week, when he had lowered his numbers of the week before, I don't remember which it was, to 151, he made the statement of, yes, I just lowered this, but if we take combined South American production, it still looks like 19 million metric more tons than last year.
Yeah, that's true. And the market has to, I guess, come to grips with that. From a technical standpoint, again, we talk about Friday's lows just above the $12 mark. Those have to hold. Will they hold?
I think the today and tomorrow answers most of that question. I don't know if they will. We're oversold enough, but whether those sellers are going to give up, whether the longs that are going to want to get out are done, I think those are the bigger questions. We break through here, I really think 1150 to 1160 is where the market really goes to.
Yeah. And we've had some choppy action in the cattle market this morning on both sides of study. The market, does it have enough weather premium in? Does it need to put more, you think? Or what are we trading here this morning?
I think you look at part of it is the weather. But if you look at, there was some pretty good jumps in those index numbers that should get plugged in today for yesterday's sales. I think that helped the feeders, but I think it needs more from that cash side to really push and go higher. We're holding ourselves steady in here on the cash. We are finally getting that box beef. Last week wasn't a bad week for box beef when we look at what we did, but we need to continue that, I think, if we're going to continue to hold the cattle together. we're not severely overbought after some sell-offs and sideways action last week, but there could still be some more downside, I think, short term.
Yeah, but the market at least must be anticipating a little bit better cash this week for cattle because we didn't see a whole lot of cash last week. The numbers were quite light.
They were, and I think the factor is probably adequate. It gives him the reason to try to jack up the box prices without slowing down the kill. The weather did that for him, and now we got to see. We get closer to the end of the week, and weather gets better. The numbers come back, and where do we set it from a total demand standpoint?
Yeah. Weather, though, do you think that that's positive longer term? Is it going to decrease feedlot performance and weights and whatnot?
We have to think that it did. Whether it gets to be long term, I think, is how long it hangs on. Do we continue to get snows? I think we look at, Saturday, where were we on Saturday night? Right near zero in Kansas City area, and 20 some below wind chill factor with snow on the ground. If we don't think that's going to slow down performance, I'm not sure what does.
Absolutely. But to your point, until cash really takes off here, it's going to be hard for at least the February left cattle to get over this chart resistance, right?
I think so. And then first of all, again, second, we need to get into February. It's still January. We're getting closer, but we really don't have to be close to where we need to be until the middle of February at the nearest in here. Not that they don't do that other times in there, but we just got to see how that shakes out.
And the hog market sitting back here today, what do you think? Have we just run up into some chart resistance? Are we kind of getting tired or what?
I think that's my best guess, Michelle. We ran up to that 73 to 74 region. I think we need to back up. We still have adequate numbers. The weather over the last week, just like cattle, did slow down some kills, and while we're at, the hogs are still there. They're going to come to town. I'm not sure they're going to put on a lot of extra weight, but they're still going to come to town. We still have adequate numbers short term in here. The real point gets to be, can we keep up export demand like we did last year and improve it over last year? If we can, I think it helps, but otherwise we could just languish in here for a month or so till we get lesser numbers behind us.
Yeah, but at least for the time being, is the perception that we're backing up hogs maybe a negative for that market?
I'm sure they're thinking about it, yes, knowing they're going to come to town sooner or later. But again, the good thing about it is we don't have any more hogs. It's just that because of the weather, shipments are delayed. You got to believe some of those plants maybe even had trouble getting people to work in some of those conditions. So it all works out together as long as we don't hang on to this weather pattern too long.
All right. Well, thanks for joining us, Boddicker Farmers Trading Company, and that is Markets Now.